Bismillahirrahmanirrahim. Assalamualaikum warahmatullahi wabarakatuh. My name is Ahmad Amirul Aziz bin Azita and my ID number is BF0106673. Today I will talk about my proposal for the final year project, and the title for the final year project is the impact of COVID-19 to the Malaysian unit trust company's performance. For the first thing, I will talk about the introduction. So this is the background of the study. As of December 2015, according to the Federation of Investment Managers Malaysia, Malaysia has 42 units trust management organizations, 56,202 unit trust consultants, and 441 conventional funds and 190 Shariah funds to pick from. The conventional funds net asset value is 294,454 billion, while the Islamic funds net asset value is 52,134 billion, accounting for 20.45% of Bursa Saham Malaysia's net asset value as of December 31st, 2015, based on Federation of Investment Managers Malaysia 2016. So in the 2019, the COVID-19 epidemic has posed issue for fund managers and investors as financial markets have been unpredictable and corporate confidence has been low. The transaction activity has slowed according to websites, causing hardship for businesses. Some funds are unable to receive proper asset values, causing complication in negotiation. So, the use of net asset value (NAV) as an indicator to assess the performance of a unit trust fund is appropriate, because NAV is calculated by dividing the entire market value of all assets owned by the fund less any liabilities by the number of outstanding fund shares, based on Gitman and Job 2002. The underlying value of a share of stock in a unit trust fund is represented by the NAV. Also, the Sharpe ratio, also known as the reward to volatility or risk ratio, is one approach to assess the performance of unit trust companies. It gauges a fund's historical risk-adjusted performance. The Sharpe ratio of a fund indicates how well it generates a return per unit of risk absorbed. So, the next one, we move to the problem statement. COVID-19, on the other hand, put fund administrator to the test as the resulting lockdown lead stock market volatility to skyrocket in March 2020, in result in unprecedented levels of trading with many fixed income dealers, for example, trading over the phone rather than through their electronic pipes. In other quarters, fair value pricing was more commonly adopted, conflicting with more automated net asset value procedures, causing delays in delivering net asset value calculation in some situations, based on Milestone Group Chairman Hodge in November 2020. Therefore, this study intends to examine what is the impact of COVID-19 pandemic to the unit trust company's performance in Malaysia. So this is the research question. My study include two research questions, which are: what is the impact caused by the COVID-19 pandemic performance of unit trust companies? And research question number 2 is there any relationship between the impact of COVID-19 towards the performance of unit trust companies? Next, research objective. So in my study, there are also two research objectives, and the first one is to assess the impact of the disruptions caused by the COVID-19 pandemic on the net asset value performance of unit trust companies. And the second one is to examine the relationship between the impact of COVID-19 to the performance of unit trust companies. So, The next one, we can see this is the significance of study. There are three significance of study. The first one is for the unit trust companies. It will helpful for the unit trust companies to interpret the impact of COVID-19 on unit trust companies' performance. The second one is future researcher. Future researcher can use the data as a reference and to analyze further. And last but not least is the investors. They should analyze the performance of the unit trust companies, which help them make a better decision to invest in highly performing unit trust companies by making profit. So we move to the chapter 2, which is a literature review. So this is my literature review for this study. I have 4 literature review total. The first one is the title for the first literature is Impact of COVID-19 Pandemic on Fixed Income Unit Trust Fund and Equity Unit Trust Fund Performance, a comparative analysis in Malaysia. The author is Selvam and Zainab, and this study is on 2020. In this study, the independent variable is a market return, and their dependent variable is fixed income funds and equity funds. And the result of this study is the average standard deviation for equity funds 1.664% is higher than the average standard deviation for fixed income funds, which is 0.2656%. And the method that used in this study is a regression. The next one is the next title for my literature is Equity Unit Trust Funds Flow and Stock Market Returns, Evidence from Kenya, and written by Caroline, Muchina, and Kennedy in 2019. The independent variable in this study is equity fund purchases and equity fund sales, and their dependent variable is the equity fund performance. So the result in this study, this the result in this study, the study thought to evaluate the relationship that exists between equity unit trust fund flow measured as purchases and sales and the NSE stock market return. So the method that have been used by this study is also regression. The next one, title for literature that I've been used in this study is Investigating Performance of Equity-Based Mutual Fund Scheme in India's Scenario, written by Satya Swarup Debasish in 2009. So the independent variable in the study is return of mutual fund and return per unit of risk, and their dependent variable is performance of equity mutual fund. The result in this study is the overall analysis finds Franklin Templeton and the UTI being the best performers, and Birla Sun Life, HDFC, and LIC mutual funds showing poor below average performance when measured against the risk-return relationship model and measures. And their method also regression. And last but not least, the last literature that I have been viewed for this study is the resilience of Islamic equity funds during COVID-19. Evidence from risk-adjusted performance, invested styles, and volatility timing. Written by Mirza, Abbas, Irum, and Naqvi in 2021. So in this study, the independent variable is risk-adjusted performance during the outbreak, stochastic dominance of Islamic funds, COVID-19, and investment style. And their dependent variable is performance of Islamic equity funds. The result that we can get in from this study is the Islamic funds dominated explicitly during the peak month of the pandemic, which confirm the safe haven properties of the Islamic assets. The trend continues till the very recent period considered in this paper. In contrast, conventional funds only showed an ad hoc drift during the outbreak. And the method that have been used in this study is a regression. So we move to the chapter 3, which is data and methodology. Okay, so for the methodology in this study, the collected data is analyzed using IBM statistical package for social science SPSS statistic version 28. And the result that obtained through SPSS will determine whether the hypothesis should accepted or rejected. In the study, I will use two methods, which are multiple regression and correlation analysis. So this is data sources for my study. Type of data I will be use the secondary data because I will collect the data from the sources. The time series for my study is yearly basis, and I will take the data from 2015 until 2020, 8 years. So means that I can get the data before the pandemic and during pandemic for make a comparison. And this is the sources of data that I will be collect. First is Malaysian Unit Trust Information Portal, annual reports of the unit trust companies, investing.com website, which I can look over their variance and so on for the unit trust companies, and Bank Negara Malaysia's website. So this is the data description. For my study, the dependent variable for my study is performance of unit trust companies. Unit trust companies. To calculate the performance of unit trust, we need to calculate the net asset value of the fund so that we can see how the performance of the unit trust. And for the independent variables, in my study, I have two independent variable which are market return and risk of fund. For market return, we can calculate it use the CAPM formula, and for the risk of fund, we can calculate it with the Sharpe ratio. So this is the theoretical framework for my study. The independent variable is market return and risk of fund, and the dependent variable is performance of unit trust companies. So the next one is a research model. In this study, I will use three formula which are NAV, Sharpe ratio, and market return. To calculate the NAV, the formula is total asset minus by total value and divided by total share outstanding. While for the Sharpe ratio, the formula is expected value times by asset return minus by risk free return and divided by standard deviation of the asset assets return. Last but not least, for the market return, the formula is a risk-free rate plus beta times by market risk premium. So this is the formula that I will be used in my study to calculate all of the variables in my study. So this is my hypothesis for this study. For the hypothesis 1, there is significant relationship between COVID-19 pandemic and unit trust companies' performance. For the hypothesis 2, there is significant impact of market return towards unit trust companies' performance. And for the last one, hypothesis 3, there is a significant impact of risk of fund towards unit trust companies' performance. So this is three hypotheses that I will be used to make my study. So that's all for the proposal presentation. So thank you and have a good day. Assalamualaikum. Assalamualaikum.